All right, guys, welcome back to Stock Talk with David. In this weekly call, we're just talking about Meta, overall market, and some plays that we have upcoming. Spencer is going to talk about Meta Materials, the dividend, and how to trade it, etc. So I'll go ahead and give it to Spencer.
What's going on, guys? So I just want to talk a little bit about metamaterials. We've all been here for a while trading it with Torch. Outlook on the company is definitely towards the negative side. We actually had George come out and say that two of their main supporters had sold the majority of their shares of MMTOP and MMAT. For my overview on the company as it is, I think it's a great group of inventors and they have a lot of great technology, but the problem is that as a stockholder, they just aren't doing a lot of things to generate profits or straight profits. And I think in the long term, they'll have to be selling a majority of their patents to actually keep the company afloat. When you're looking at MMTOP, they are going to switch it into a spinoff, which is going to be oil coal. And the problems I see that are actually going into MMAT and crossing over is that you've already seen a decline. You see a lot of people selling out of the spinoff already. And I think that after the spinoff does happen and the majority of people collect that dividend, that it's going to turn around drastically. You'll see this thing back in that dollar to $1.50 range just because the company's not generating enough cash. They're spending a lot of money on R&D. And I think that the only reason we're seeing this thing hold up, and even in this $3 range, which we saw breakdowns of that key $3 range, is for the hope of the dividend. So the dividend is supposed to be paid off within the first quarter of the upcoming. The next quarter is when the spinoff is supposed to be sold off, when you'll be actually paid as a payment. It won't be an issue. It'll be an actual issue payment. But I think after that, we'll see a drastic decline. Those are my opinions on MMAT and the dividend as far as what we're looking at right now.
Cool. Yeah, I agree with you. We were talking about it earlier, and I don't know if I can find it again, but I was going through the 10Q, and just the most concerning thing is that they have so many patents, and it's not really clear how they're recognizing the revenues or how they are receiving the money, things like that, for what they're doing. And so, especially when they have a lot of patents, the big problem is that they have to continually keep up with R&D, and when that becomes very, very expensive, and it just does nothing but eat into the gross margin. And we can see here, let's see, this the other problem too is trying to compare this company. All this past data is technically from Torchlight, so it actually just makes it really hard to compare it to anything. But if you look at the income statement, you can see just revenues, and again, it's in Canadian dollars because that's how they trade. But it's pretty close to the US, but you get the idea, though, that they're just having a lot of problems with the income. They're in problems creating profit, and that ultimately provides a big issue to shareholders and prospective shareholders as well. So that's our thoughts on Meta. Any more questions, feel free to DM me. Really quick, I wanted to jump into just the overall markets and things to look at. Usually every Sunday, I like to hop into CNBC, get an idea of just broadly what's happening. So sometimes you see some things like it'll tell you if the futures are rising, you'll see some economic stuff. But the best one that I like is actually trading economics. We talk about that one a lot in the group. And as some of the Asian markets open up, you're starting to see some of their numbers come in, etc., etc. New Zealand services sector continues to contract, but that makes sense because they've been locked down so much. But yeah, you still see a lot of these cool things like Japan big manufacturers confidence unchanged. We need Japan. They produce a lot of the technology. They produce a lot of the commodities and just overall like industrial products for the U.S., which is cool. So yeah, we'll talk really quick about Boeing. I put that alert out in the video not too long ago. For the same reasons, I'm really bullish on Boeing because of, if you haven't seen the video, please watch it. But the big reason why is actually that they're pulling together with China. So China's federal agency came out a couple weeks ago with just a list of demands, and they said, hey, if you guys can get the 737 MAX back to these specifications by this time, we'll start flying it again, we'll start ordering from Boeing again. And the deal is that and China actually has an incentive to do that. It's not just a whole just nice thing that they're doing. They have an incentive to do that because the travel from their country to the rest of Asia and to the rest of that part of the world is absolutely crucial. China's literally a hub for business. It's a hub for travel, especially for business travel. And so they really, really need Boeing to step it up and to do well. So that's a good thing. I'll try to find some Boeing specific news later on and share it. But that's the big thing right now is the China. And then when we think more about China, the fact that they're even talking to Boeing, that's like offering an olive branch to the current administration. And it's a good thing overall for the relation between China and the U.S. It's a very tricky situation, but it's actually pretty good. So I'm excited about that. Spencer, do you have anything else for us?
Major stock I've been tracking and watching has been Ford. We've been waiting to break this key level, sitting at this this $19 level. We've consolidated over the last couple weeks. Ford, if you're watching CNBC or listening to Kramer or anybody talk, they're actually trying to be one of the major players in the EV sector. They already have 8 plants already converted over to EV, and they're looking to rival Tesla head to head and take a lot of that market share away. There's been a lot of bullish calls on Ford. I've been following them all the way in the $14-15 level, and I actually took out some March 16 and 18 strikes, which are already doing well. But we've just seen this consolidation at this 19-20 level with the breakover, and we saw the crazy 10% move on Friday with Ford, which that just broke our top, and I could see 24-25 come end of week. I am looking longer out. I am in the Ford January 22 strikes, and if you're looking for a short-term play to play as well, the 22 strikes I entered on Friday at 17 cents. They're still modest at 35 cents, but Ford's just getting a lot of attention when it comes to the EV sector, and then being one of the major players. You've seen some of the other companies like Lucid and NIO and even Tesla start coming under fire with some of their estimates, some of their reporting, and that's where people, if they're looking for an EV sector to come back to, they're looking for a strong front runner. There's been a lot of positive PR put out by the Ford CEO, and that's something I like. You see it's beneficial to Tesla with Elon being as vocal as he is, and Ford's really coming out with their best foot forward and putting out the most PR when it comes to it. So I think it's just something to watch in the short term, that December 17th, 22 strike. And then if you're looking even longer, the January 22 strike is still in range. It's not tremendously overvalued as of right now. And so if you're looking to pick up a long, I think that's just something I'd be looking at as well.
Yeah, that makes a lot of sense too. It's interesting because I think Ford's definitely had a turnaround with the management, and that's just making the company better as a whole. But yeah, we were talking earlier too about gross margin. This just plays into the story about how they're promoting and they're doing a good job just with the company in itself. This gross profit margin is like pretty interesting. Obviously, 2020 sucked for almost every single company that wasn't in tech. And then you can see that so in 2020, they did 4.8, and it looks like they'll try to do about 13.7, it's estimated. So they're probably getting close to that number by year end, which is just actually a couple weeks from now. So that's interesting. That's a big comeback story. That's a nearly triple off of the 4.8 number in just a year, which makes a lot of sense when you look at that chart again. We'll use a little different one. Just quick view. I mean, even in 3 months, I mean, that is pretty significant. 12 and a half going to 21. I didn't even know about Ford. I didn't even look at it for a while, so that's pretty cool to know. So yeah, I think the play when we're talking about what's happening next with the economy, when we're talking about all these things, I really think the number one key is that it looks as if with the Fed rate hike, and I don't have the headline pulled up for it, but it looks as if and sometime in Q1 the Fed's going to raise rates, which just means money becomes more expensive, and companies that don't have earnings, or they don't have a very easy valuation. What I mean by that is if they're trading at like 20, 30, even 100 times price to sales, if they haven't gotten slaughtered that yet, they're going to get slaughtered. And the companies that have, in a general broad stroke here, the companies that have a smaller PE, they've got just very modest numbers, but they have a very great, fantastic business underneath, you're going to see those absolutely zoom up. And that's a couple that we've been talking about, such as, and I'll give you a couple of examples. Boston Brewing, which is ticker symbol SAM. We've really liked this one for a while, ever since their earnings, which we thought was really overdone. This is a weekly view here. You see this, they were trading at about a little over 1,300, and now they're at, the lowest point after this mark. It was like 450, something like that. So it's pretty big sell-off. The reason this happened, though, is that they produced way too much hard seltzer, and they just couldn't even sell it. They had to destroy it all. They were sitting on that inventory. It hurt every margin, all the earnings. It hurt all of that. And so it looks as here they've been talking about for the past month in their last earnings. They have a good plan. They've got a lot of strategic partnerships, and so do the competitors too. But it looks like if we're looking for the biggest bang for the buck and maybe the biggest move, SAM is looking like it's starting to become a buy. I probably wouldn't buy just yet until, let's zoom in just a little bit with this chart. I probably wouldn't want to get into about 550. What do you think, Spencer, on that? Assuming the fundamentals play out, what do you think?
So I've been watching Sam Adams, and David and I have kind of fought about this, when to catch this falling knife. I do like to say I like that it gained the support, but I think before you get over, I'd even say 570 before you're looking higher target upside. Now, when he was looking at the gross margins, that's something that people are going to watch, especially when you see the money move over into consumer staples, which in the last week we've seen an 8% increase, but we've been slowly seeing this trickle over into these consumer staples and the value names. Mm-hmm. So I think definitely when it comes to just Sam Adams in general, I've been looking for that 550, 570 pushover to actually lock in when I'd actually take it. But I definitely think if you want to start trickling in early, it may be a great idea when you're thinking of the overall market. In general, all of these tech names and all of the big fan names have been taking the majority of the attention. If you look in the NASDAQ, the majority of the large FANG names have already taken. We've already seen over highs. So if you're looking for the market to rally and continue with the coronavirus being pulled back, you need some of these values and some of these names to actually start seeing. And I think that's where you're going to see the market grow. Essentially, your bigger names are going to start keep their attention, but you'll see names like Sam Adams or a Coors or a Hormel Chili or a Campbell's. You'll see those start growing, and that's what's going to push the market higher on this next leg.
Absolutely, yeah. So this is what we talked about almost over a month ago. We said start watching for the transition from these high multiple companies to the more modest, just chilled out companies, so to speak. And this is XLP. This is the index fund that tracks consumer staples. Inside that, you'll find just the solid companies, the low beta ones, essentially the Boston beers, the Coors, all that stuff. But yeah, just like Spencer said, this is a weekly chart. You can look at it, hugs the trend line almost, but what's interesting is we're now starting to get this big move up. And when I look at the dailies, pretty significant move it made in the past couple of days from this zone to this zone. Looks like it's starting to go. It might pull back ever so slightly, but this will be intact at least until the end of Q1. That's my estimate. Again, that's just my idea. You don't have to trade with it. You don't have to follow it. It's not financial advice, just opinion. But that's pretty much it. Spencer, is there anything else that you have to add? Any stock plays?
Well, I did want to talk about overall when we're talking about interest rates becoming on the rise. Something you got to look at is history. When they did raise interest rates or have to raise rates, normally within the first year, it was actually a bullish signal for the market. Now, when I say that is the market's already pricing in the first move of the Fed raising the rates. Now, what we're looking for is it not to be a surprise. So we know he's going to have to raise rates. Probably the estimates were like 4x what it is right now, or when it is his move actually that's going to have to be, and that's because inflation's so high. But the market is already pricing that in, so we're looking for a surprise when it comes to those interest rates. But if you look over history, the first year when rates do start coming back on the rise is actually a bullish signal for the market, and that's how it's trended before. Mm-hmm. So exactly. One stock that I actually wanted to take a look at is FedEx.
Okay.
So
Let's look at the 10-year really quick. Just talk about what Spencer was saying. And yeah, that's my idea as well. Is we can see rates that, remember in March, late March, we played a lot of tech names, and in about 2 days they just all got slaughtered. That was the big rate hike, or not the rate hike, but just the increase in rates from this whole zone right here. So anyway, but yeah, we're starting to increase the rates. You're going to see tech come back to more fair valuations, whatever that means, and you'll start seeing the staples and the laggards of the Dow, so to speak, dogs of the Dow that have just been absolutely abused. They'll start to come back. And Spencer, you said FedEx, right?
yeah, I actually love FedEx, and it's actually an earnings play. They report earnings on 1 second. They report earnings on Thursday.
Okay, cool. So here we go. This is the daily chart. I'll give you permission next time to share the screen, but we'll work with what we got
Yeah,
first.
no worries. No, that's good. That's all I need. So the reason, if you're looking when we're thinking of comparison, you think FedEx, UPS. Normally during the holidays, you do see a big push up in both. I've been tracking FedEx for the last 3 months since their big dip off, come like late September, and they really took that hard hit down. Now the reason they took that hard hit down was because they had a miss on earnings, and they also had problems with their wage, and they actually had their union go on strike as well. But something when I look at when we're talking about stocks, or if you're looking even a comparison with the FedEx and UPS, FedEx just had the most upside when you're talking about coming back on a short term. Now they have in the last 2 days have come back down on their earnings estimates. But I've just been tracking this since it's bottomed, and we've just seen you've seen the EMAs and the MAs all start trending towards the upside. I just think that this company, with going into the holiday seasons, this is one of their best earnings reports that they have going in. They promised us strong numbers with their last earnings, and I could just see a even higher push up since then. If we're looking at FedEx, I would say it's more of you're taking the company on a longer standpoint, not just in this short range. So if I were to play FedEx, I'd be looking at the June 21st 270 strike. And the reason I say that 270 strike, if you pull that chart back up for me, David, the reason I like that is just because you can see where this company is going to start to come back and where it had its last supports. Which, if you look at that chart, it puts it. I have a line it crossing over 248.78 for a push up into this next zone, with it topping out at that 270. So I just think if it can hold this 240 level beginning of the week, 245 level through Tuesday, Wednesday, then I think that's going to be a pretty bullish sign. We're going into holidays, and you see that e-commerce is picking up, so you know that shipping has to be on the rise. And with that being said, I think that 270 strikes a really good support level for FedEx. And I'll share my chart with David a little later, so he could post that in the comment section on the video for you guys to see as well.
Yeah, that'd be sick. I agree with you. I think um, this zone right here is pretty significant, and I wanted to look at just the estimates really quick. And so we'll just comp it to, let's see, I guess we're going for Q2, yeah, November. So yeah, so it looks like they might take a bit of a decrease year over year, but it's actually kind of exciting is that if we look not too much further into the future, and as you were saying, a longer term view, 3, 4, 5 months out maybe, that's a pretty strong number. That's interesting to see that they're going to have a better earnings. And what it could be is it could be they're getting the margin under control, which is what that's kind of starting to look like maybe. Hopefully that's what they do. Again, it could be a combination of things. It could be just a rapid expanse in revenues, which we do see that, EBITDA, things like that. So maybe not so much the margin just yet, but I think still this is more of a revenue story than it is so much on the margin, and we'll see what's happening with it. And even as we go for yearly number, we've got 19.6 as the EPS, and then 2023 22.08. Those are the estimates. So that'll be fun to see. But yeah, FedEx. Do you have another one, or is that it?
That's the ones I had developed for now. I'm also looking at Apple. I think Apple is significantly undervalued. If we are saying tech's going to be taken under control, Apple, you've seen this within this last week. You've seen a significant swing up with companies that have been lagging as far as overall. And the
Mm-hmm.
FANG names, and Apple and Amazon have been two that have really lagged. Now, I know that sales in iPhone have come down, but if we're playing on a technical basis, you saw on Friday with a huge swing up in momentum to break that 170 level that was really hard for us to strike through. We stroked through with volume. If we can settle down, see a little pullback back down to this 176, 177 level, I think Apple continues on even farther and higher up. A strike I'm looking at is June 21, 200 calls. So the way I play is a little different than a lot of people. I like taking my long and then playing my weekly momentum. But I think that Apple is going to claim it's going to have a small pullback, and if it can claim over 180, I do think Apple's fair value is that 200 level.
Yeah, that makes a lot of sense. And just as soon as I pulled up the chart, again, I haven't looked at a lot of these on the weeklies recently, but this is interesting. That looks an awful lot like XLP, I think, which is the staple. So as you were saying, undervalued, it's just been kind of hurt, et cetera, et cetera. I mean, yeah, that's very close to it. Same
You
pattern.
just haven't seen significant moves when it comes to an Apple, or
Mm-hmm.
even we saw it in Oracle, or you saw it in a Marvell. They're looking at names that just haven't got a lot of attention, that are in these sectors that are really hot, and then people are actually looking on valuation and going, "Wow, Apple really hasn't moved. This is what we have on the basis," and that's why you see it pushing up. Like I'd rather play an Apple that has strong sits in cash. I'd rather play an Apple than play some of these speculative names like a Roku,
Mm-hmm.
if I give it that, because we're talking about companies that we're really looking at valuations, and just Apple is just it's a steady company, and a lot of people don't move from Apple. I mean, I'm sure even your dad has some Apple, but I'm saying I like it as if I'm looking at a tech name that I'm still comfortable holding and comfortable looking at the upside. Apple is definitely one of the tops on my list.
100%. Yeah. No, I agree with you on that one. There's never really like a risk with Apple unless something crazy happens. Everything's checked out. They're almost like the gold standard for tech. Whatever Apple does, you can assume tech's gonna follow. They're almost just, they're almost like the triple Qs in itself, which I find pretty interesting. But yeah, we'll start to wrap it up. But I think what we'll do is we'll send out some of this recap, send out the video to the Discord. If you're not in that, this is your first time with us, thanks for watching. Really appreciate it. Make sure you just subscribe, and if you're into it, check out the Discord. It's a group of pretty highly motivated traders. We talk a lot about economics, how to play trades about 1 to maybe even 6 months out. So it's not necessarily for day trading, but it's really just for smart trades and following the economics. So thank you a ton. Thanks, Spencer, for hopping on, being my last minute guest. I really appreciate it, man.
Anytime, I'm always here for you guys. I'm actually pretty busy when it comes on Discord, but if you reach out to David or even shoot me a DM if you need any help, just let me know. I'm always here to help everybody. I can look at whatever chart you'd like me to, so just reach out, come join the Discord. A lot of great guys in there, and shout out David and I. We'd be more than happy to chart with you or give you a shout whenever you need it. So thanks for having me, David.
You got it, man. Thanks a ton.